Welcome back to Higher Exchanges. I'm your host, Jesse Redmond, Head of Investor Relations and Business Development at Leaf Brands. I'm here this week and every week with a guy named Morgan Paxia. He's the co-founder of Poseidon. Morgan, what's going on, man?
I'm doing well. I was just laughing. A guy named seemed funny to me for some reason. So no,
I try
I'm
to
doing
change it
well.
up.
Yeah.
I wrestle with it. Should I just be like more casual? Like when Joe Rogan starts the show, he just starts talking. I've gotten the habit of doing this kind of formal intro as if people don't know who we are. So yeah, I kind of honestly struggle what to say every week. So this time I called you a guy named Morgan Paxia.
Yeah. I am
And
that guy.
if we're breaking the fourth wall, Morgan has some new art up, and Morgan is without his
Yeah.
glasses. He's looking very spiffy back there.
Yeah. We did some rearranging. So I'm out of the cannabis witness protection program and back in action. So
Nice.
kudos to my wonderful wife for building out a beautiful background for me, so I would look more appropriate for things like higher exchanges. So
Yeah, we need
how are
the
you,
women in our.
Jesse?
I'm good, man. We do need the women in our lives. Mine helps me with everything from haircuts because she's a hairstylist to what clothes I should wear. This all predates her, but she could probably make it better for me. But yeah, definitely need the women in our lives to help us with some of those weaknesses.
Yes, they are abundant.
And yeah, exactly. And we have one of our favorite guests back. He's Sam Armenia in real life. He's VP of Corporate Development at C21. You probably know him as Sammy J on X. Sammy, what's going on, man?
How are you both?
I'm doing good. Is this your second time back since
Third.
we switched to video? Yeah, the second time on video?
Yeah.
Yeah, I think you were the first video
right.
guest that we had. Yeah.
That's right.
Wow, that's
For the
cool.
seven-
Good memory.
Yeah.
How's summer so far in Toronto?
It's about to get really hot. I think this coming weekend is supposed to be in the 90s. I'm going to use Fahrenheit for you guys. Yeah, so it's starting to pick up that way. It's been a wet and cool spring, so looking forward to the change.
Nice.
My little guy, my little kindergartner, just graduated this morning, so we
Oh, congratulations.
go for that. He's my youngest, so they're growing up fast for sure. My 8-year-old is in Little League, smashing home runs already, and I get to be his coach, so that's fun.
Yeah, those are some of my favorite times when they're old enough to go to the bathroom by themselves and feed themselves, but they're young enough they still think you're awesome.
Yeah.
Right now, I'm transitioning out of that latter stage where I've got a sophomore in high school. Yeah, I've got a sophomore in high school that's a boy and a soon-to-be senior that's a girl. And yeah, they're all super into their friends. And if dad ever was cool, he certainly is not cool anymore.
Correct. Well,
Comes back around though, doesn't it? It's like a boomerang.
Yeah, I mean, not to go too much down the parenting rabbit hole, but I think the relationship just changes. Like I used to freak out about it a little bit, but it just changes. You know, I wouldn't call them peer-to-peer relationships, but become little young adults. And even when mine go off to college, you know, I still, used to talk to my parents and visit my parents. And so sometimes I look back, I look at the guys like Sammy with the younger kids. I'm like, oh man, I'm going to miss that so much. But it's also cool to see them grow up and, become their own little people.
Yeah, younger kids, but I'm not younger. I'm approaching 50 very soon. So,
Wow.
Yeah, late start on the family. Years.
Well, Sammy, we didn't have this on the agenda, but I'm going to go rogue and off the script to start off with. But I got to say hi to you at Benzinga. Morgan and I chatted a bit about my Benzinga experience, so we don't need to spend too much time on it. But just curious if you had any kind of high-level takeaways from the conference.
Yeah, I mean, it's over the years of participating there. I mean, this was the first time I was on a panel, and so my attention was a little split that way, but had a lot of meetings like I do always, and I would say there's a wide spectrum of companies that are there to try to be saved or to get help, whether it's capital, whether it's the potential for mergers. There's a lot of chasing that there. A lot of networking, obviously, with industry people that we know, and really, for me, aside from being on a panel which was about growth and taxes in the industry, just trying to see what opportunities are out there. I used to think that doing all the industry conversations through Zoom was enough, but you really just get to a different level in person. than you can do, over the phone or or by Zoom or whatever. So, making sure you kind of show up at those things and have those one-on-ones, I think, is important. So, I would say overall it was really productive. I'm concerned about the industry. Obviously, I found it very strange that this was the first year it felt like hemp was really, co-star, let's call it, at the event. So I'm not sure if that was, a concerted effort to have them included, and whether or not that's going to be, the direction that the industry ends up going, right, where we kind of become one. We'll see. We'll see how the regulations play out over time, right?
Yeah, I agree with you. And I was the same way, Sammy, where I didn't even go to these events for the first few years I was in the industry. And then I started going maybe 3 years or so ago. And it is totally valuable. I mean, you and I have met each other a couple times in person, and it just builds a different bond with people, especially for more serious conversations. We were out there meeting with investors and brands and lenders, and actually having a handshake and meeting in person, is super valuable. So I agree with you on that take. I also agree with you, kind of the vibes and sentiment, and maybe we can use that as a way to kind of transition into the more formal agenda. But it seems like the problem, big picture that we're facing, Sammy, is we don't need to talk about the lack of federal reform. I think that's a pretty tired conversation. We know we're stuck. We're stuck on, waiting for Schedule 3. We're stuck. Morgan, plug your ears, waiting for safe banking and all that other stuff that could happen. And it just becomes more clear over time that none of the prognosticators have an edge in predicting when this stuff is going to happen. So I don't think those conversations are particularly interesting these days. I actually didn't have a lot of those out there. But the conversation I did have a lot of, Sammy, was about the growth side of the business, and that it's one thing to be stuck on the federal reform side. It's another thing to pair that with being stuck on the growth side, because of the lack of reform and a lack of growth for most companies. There are exceptions. It just makes it not very compelling. And, here we are, sitting there at, a $2 MSOS, which I think reflects that sentiment. So I'm kind of curious overall your perspective on, where the industry is from a growth perspective, and maybe contrast that to what you're seeing personally over at C21.
Okay. Yeah, I mean, there's no question that the industry's stuck. It's stagnant right now. I don't know if anybody can measure definitively whether or not all the growth was siphoned off by, intoxicating hemp. If it's what's the combination of intoxicating hemp and price compression, normalization as states mature? It's really hard to know. If you look at a state like Nevada, which I can speak to, year over year, Headset has them down 13%, which is not all that different than Florida, I think, was on a sales front. But the difference was Florida had significant unit growth, and Nevada had the exact same unit decline as it did sales decline, both in the 13% range.
So you mean unit decline as price decline?
The number of unit transactions, essentially, like the number of unit sales versus cost. So when you think about it, the first thing that comes to mind there is that just means that price is kind of stabilized, right? That, as opposed to a state like Florida, where it still has that unit growth, that double-digit unit growth, but prices being normalized at a dramatic pace there since A3 kind of failed, and they had probably too much. They had probably built too much growth or too much grow out in anticipation for rec growth, for adult use growth, right? So nobody knows where the bottom is in these markets. But if you think of a state like Nevada, where at least in, the locals type of Reno market in the north, we're already seeing basically a $20 eighth is the norm now. And so, how much room is there for additional compression on some, in a state like that? Probably not that much, which is why we're seeing basically stability year over year on price. But, when you speak to unit decline in Nevada and sales decline, that becomes regional. And, there's a big difference between what's happening in Vegas and what's happening in the north, at least from our perspective. We recently put out preliminary year-end numbers, which is our March 31s. And, we've had 4 consecutive quarters of growth. each of our stores in the north has had transaction growth every quarter this past year, to the tune of 38% transaction growth over the year. Yet you have this 13% decline in the state. That's really all pointing to Vegas, where the majority of the population is. The majority of the sales are in Clark County, and what's happened in Vegas is twofold. I think there's a dramatic decline in tourism in Vegas. 4 consecutive months now where tourism's significantly down in Vegas. I think 8% was March. April, 180,000 less visitors year over year. So, there's that aspect of what's happening in Vegas. And then there's the intoxicating hemp, which is basically siphoned off a significant amount of the state legal operators' sales in the Vegas market. Why? Essentially, it's federally legal. So they're servicing the strip, they're servicing the casinos, the hotels, delivering it to hotels, whereas the state legal operators are still not allowed to service that aspect of Vegas. So, I'm not hearing that there's anything that's being done about it either, which is, it's troubling, it's problematic. I spoke with an operator, a Nevada operator who's also in Vegas, and they said that, the state has pretty much dug their heels and that they're not going to address this, that it's a federal decision. And so unless the federal loophole with the Farm Bill gets closed, it's status quo as far as how they're going to treat this. So, I think Morgan was mentioning to me earlier, right? You go to Vegas now and it's legal sales, legal cannabis everywhere, free delivery to your hotel and stuff. So it's hard for the Planet 13s and the big tier ones who have those off the strip, retail that probably used to get a lot of traffic, from the strip out to their stores off the strip. It's hard to compete, and they're not only not able to compete in price, obviously, considering the hemp market, isn't taxed the same way. It's not tested. It's not regulated the same way. But convenience, the convenience on the strip, especially for tourists, right? It's there. It's everywhere. Taxi drivers are getting it for you.
Yeah.
So it's just, you don't need to take that ride.
So how do we deal with that, Sammy? When I think about the choices we have as consumers for cannabis, I think about price, I think about quality, and I think about convenience. And maybe there's some other variables. Feel free to chime in a second here. So as someone in California, my choices are in Santa Barbara. We have 3 dispensaries. We have a Jushi-owned one, Beyond Hello. We have the Glass House one, the pharmacy. And we have my great friends at Gold Flora have a coastal store. And so there's 3 choices there. Prices kind of similar, a little bit different offerings, pushing different in-house brands and that sort of stuff. So that's one level of choice. Then also you have the traditional market, the black market. And man, in California, a lot of that flower is, fresher, better, more small, crafty type stuff than the legal market. So that pushes some people in a direction. Then the other point is the price. And so when you said $20 eighth, Sammy, you can get a $10 eighth. Glass House has that Allswell eighth for $10 out the door, but that's sun grown. I don't see many $20 indoor eighths in California. That sounds pretty tough. So when you think about those variables, we have the problem. Again, I feel like in the industry, the problem isn't so hard to identify these days, but the solution to it. So if you're a Vegas, I know you're a little bit different, Sammy, and you're not facing the same things being further north in Nevada. But if you're one of these dispensaries in Clark County, or just one of these dispensaries, anywhere around the U.S. in a legal market that's seeing declining sales, declining traffic because of let's point to intoxicating hemp. You could point to the black market. Point to these different boogeymen out there.
One and the same.
Yeah, exactly? What can they do to combat that? Like, you mentioned increasing sales at your store. You guys doing really well. Maybe you could frame it in that manner, or just kind of broadly speaking, like, what does the state legal industry do at this point besides yelling at the hemp people and yelling at the black market within their own framework to find a solution to that problem?
Don't know if there is one. These are long-standing operators in these markets. I mean, some of the Vegas operators have been there for 10 years since adult use and medical. I think medical was July 2015, so it's coming on 10 years. We were the first in the state, so we're about to have our 10-year anniversary in July. But the Vegas operators were right behind us, and they've been there forever. So aside from chasing the state level regulators to make this a fair playing field, which it sounds like at least in states that are legal like Nevada, they're less inclined to get involved than what we're seeing in the states like Texas and Carolinas and things like that, where they're being a little bit more aggressive with trying to put this back in the box or back in the bottle. I'm not sure there's much you can do other than try to compete on price. You can't compete on convenience in Vegas. Vegas is its own unique situation because they're not allowed to. So if anything, they should all be the state legal operators in Vegas should all be getting together to try to gain access at least to the strip. I mean, that would level the playing field without changing any of the federal dynamic with hemp. Just having access. These are state legal businesses. Why are we not allowed access while they are? It's the same thing. It's the same plant, same product. So that would be one thing. Price. I mean, Vegas tend to always be pricier. A lot of the operators that are throughout the state would have different pricing in Vegas than they would in the Reno market. The Reno market's very competitive, classic mature market. The population's not that large in northern Nevada. It's in the 500,000 range, and you have 15 to 20 operators retail there, so it's competitive. And you have to lead on price. You have to lead on the customer experience. I think that's what, if you go on Google reviews and read, why is our new store doing so well? That's what you're going to read on every comment, right? Is the customer experience. The bud tenders, are amazing at recommendations, at spending the time, convenience with all of our locations in the north. Our flagship store has drive-through. So we really have found a way to kind of tap into these little sub areas of the north and, capture market share there, right? And I'm not saying all of northern Nevada is, thriving. What I'm hearing is that it's not, but I don't think it's being impacted the way that the South is as far as intoxicating hemp, siphoning off that kind of growth. I wish I had some clear explanation as to what our secret sauce is, other than, we're a price leader. We have a really favorable customer experience in our stores. We're located really well. We've always been this. This isn't new. This is what our model has always been. We're talking about 750,000 transactions through our 3 stores, right? It's dramatic. It's high volume. Yet the experience is there that the customers keep coming back. And that's a combination of price. It's a combination of offering. I mean, we offer everybody's product, 700 SKUs, all the MSOs products are in our stores. So we're not just pushing, Phantom flower and hood oil vapes, our own in-house, right? We're offering you everything. And, that type of one-stop shop is favorable for most repeat consumers, right? That they have that option.
Yeah. So you're a bit unique in terms of the experience that you're having, Sammy, but if you put on your analyst hat, which, I don't know if that's an insult or a compliment, but I think you could be a cannabis analyst.
Not a pay-to-play analyst. Yeah.
Yeah. Hey man, be cool. And so
you're not the one I was referring to.
Yeah.
I really have a problem with, with the one that takes payment from everybody and anybody just to put an overweight label on their name. It's
tough. It's tough if you're taking dollars and giving buy ratings, putting price targets on stuff. But
really upsetting.
So what do you think about for other operators? So I think about Leaf and I think about our challenges in California. We've had consistent sales. We're one of, if not the leading producer of bulk concentrates in California, but we've struggled with margins, and that's because 2016 a liter of distillate was $15,000, and now that's $1,000 or $1,500 depending on the quality. So we've struggled a little bit with margins. Unit growth has gone up. Margins
Yeah.
have been tougher because prices have come down in California. So we're going on the offensive to solve that problem, and we're going on the offensive by planting Salisbury Canyon Ranch, which will drop our input costs by using our own flower that we're growing in a real low-cost format. So that helps solve the California margin problem. And then the other piece, Sammy, is we're moving into New York, which is a healthier, higher margin market. Certainly,
Right.
we model that to come down over time, but diversifying revenue source, higher margin type environments. So when people are struggling out there, I bring up us up as context in that you could get more vertical, which can be helpful. But if you do something you're not good at, I think that can make the problem worse. And you also could expand to new markets. But I think we've seen the pros and cons of that. Like a lot of these MSOs have gotten very wide across their footprint. Look at what Air did. Air did a lot of things that in hindsight are mistakes, but they went into a lot of markets early that haven't flipped. And I think that's been difficult for them. So how do you think about those two pieces as maybe solutions to the broader problem, either A, getting more vertical or diversifying your footprint?
I mean, in Nevada, you almost have to be vertical. There's really, I don't know of an operator that, is succeeding without it. It's a unique market. Wholesale there's not a strong wholesale market in Nevada. So, of the 105 licensed dispensaries in the state, vast majority are owned by, the MSOs, the public MSOs, and everybody's obviously, selling their own product and growing their own product. For us, we had some fortune in that we had expanded our grow, which lowered obviously our costs on anticipation of additional retail doors. And that was a couple of years ago, and some of those deals didn't end up happening. We finally got that one with the Deep Roots store before Deep Roots became part of Vario last June. And so just having that additional grow infrastructure has lowered our costs. I think we're in the 500s per pound. So we're being an efficient grower. And
how many square feet?
We have 40,000 built of the 104,000 that we have our facility. So we've only built out 40%. And that's what our model is. If people say, "Where's the growth?" Well, the growth is exactly what we just did. Being very selective with where we expand, and making sure it's an accretive transaction like it was last year. Driving that organic growth like we did. I mean, we're talking about 100% same store sales growth in that store in 9 months. It's dramatic. And also, still driving same store sales growth in our legacy stores. But even in Nevada, with price coming, let's call it cut in half. It's probably $40 eighths a few years back, and now they're 20. Our margins have gone from 50s to mid 40s. So you took a hit. So you have to be that much more cost effective with your SG&A. And one of the reasons we did this store where we did it is because we didn't really have to expand our team, because it's geographically it's our same teams deals with all our north stores. So it was really just having more bud tenders and the additional lease. But you're talking about a dramatic increase in top line. And so that a lot of that ends up hitting your bottom line. So that's how we've offset on the margin, right? Is that, and we plan to, that's our goal, is to just kind of rinse and repeat a model that is low risk, which I think is key right now, right? Like you don't want to swing for the fences here, because if you miss, you may not get another chance. So it's just that,
And let's stop there and just unpack that for a sec. So yeah. I could see what you're saying there. I could also see, I wouldn't say Leaf is swings for the fences and by going to New York and building the farm. But I could say a contrarian point that if you can be more aggressive and you can tack on some growth during this period, maybe that's an opportunity to stand out more in this environment. So when you lean towards the more conservative side, what's your kind of calculus there?
I wouldn't say we're being conservative. I would say we're being cautious. If the opportunity came up like Leaf took with New York, if there was an opportunity where there was a similar type of business to ours, free cash flow positive, isn't saddled with leverage, and it, there was 1 + 1 = 3 scenario, we absolutely entertain all of those conversations. So I wouldn't say we're being conservative. We're just very cautious. We're not going to take a shot on something that needs to be fixed, and we're not going to take on the leverage that just can't be managed in this industry with the current scenario, right? Like, I mean, you guys see me talk about this stuff all the time, right? Operating profit, operating margin, best in class. We're talking about GTI, us, TerraSend. You're talking about 12 to 15% operating margin, and where the cost of capital is in this industry, it makes it next to impossible to make a dollar. So how you fund growth, I think, is as important, a story right now as anything. If you saw what we did, we issued a convertible note, but unlike most convertibles in this space, we have a principal pay down here right now. So every month we're paying off 4% of that convertible with cash, and so it'll be paid off next year. So like we did with our $30 million note, we're not just servicing our debt, which I think has been the big problem in this industry. It's taking on the leverage, but then just servicing it, and that eating all the profit for most of these companies. We've been consistently aggressive in the principal repayment, and that's how you free up your cash flow. So that to me is the model that we want to continue to kind of pursue, is making sure that we take on bites that we can service and have a principal repayment.
Is the just real quick on that, being a convertible, are you choosing to amortize versus convert, or is it just because it's below the conversion price, and so then it's functioning as debt, and so it's amortizing?
Yeah, we gave the option to the convert holder. Obviously, cash is going to be the choice when it's under strike the way it is, right? So if the industry miraculously got reformed tomorrow and rallied and was in the money, I'm sure maybe the rest of it would convert to equity. The other reason we were okay with that, the idea of equity, I know is scary for some people, but we have not issued a new share of this company in 6 years, right? I mean, not one, right? So if anybody's been extremely careful and cautious on the public side with the shareholder in mind, it's been C21 by far. Obviously, we're small, so it's been easier for us. We haven't chased new state growth the way that a lot of the other small companies did over the last 5 years. But that's also what put us in the position to be in offense and have a healthy balance sheet and be growing right now, whereas everybody else is trying to solve their problems. So we did things essentially, in reverse, right? We dealt with the balance sheet first. We dealt with the debt first, and then we pursued the growth after. And that's looking to be a pretty smart decision.
How many stores would it take for you to own to fully utilize that facility? How many more?
So the state average has dropped. This, state sales average used to be 10 million. It's down to like 6. And that speaks to what's happened in Vegas more than anything. The average store in Nevada, it's price compression, obviously, but it's also transaction decline that's happened in that state. So if you take the state average of 6, all of our stores trend higher than the state average. But if we would just get the state average for the rest of our stores, we could service at least another 7, 8 stores, no problem, with our facility. Right. So there's the ability for us to consolidate that market. We're not near the end there, right? If you look at GTI, who's the largest operator in Nevada, I think they opened up their 11th or 12th store recently. So that you're not running into it yet, and that's one of those unique markets, right, where you're not, even though there's a cap on licenses, you're not capped in how many stores you can have like you are in Ohio or Massachusetts or some of these other states where you just are completely up against your limit. It's why you see GTI pursuing that, that growth in Nevada and in the select states that they can, right? So
it's more like Florida, where you get a license and you can open as many stores as you want.
No, because unlike Florida, you can only acquire the existing licenses. There are no new licenses.
Sure,
Each of the 100+ stores comes with a license. You have to acquire that license.
Yep. So there will. So you're saying, in another way, there will only be 105 retail stores. Got it.
Correct.
Yeah. So that's. I mean,
But we're
I
also
know
talking
that.
about a population of 3 million versus 20, 21, 22, whatever Florida is, right?
Right.
And obviously you have the visitor, the tourist that is a huge portion of that sales volume in Nevada, but population is just not big enough to have an open-ended kind of retail, right?
No, for sure. Yeah. No, I mean, it seems like it gives you it's nice to have, in some instances, like, just focus on something, and it's like, okay, so we know we need to get this utilization up, so this is what we need to be going after. And to your point about being cautious, I'm assuming of those 105, most of them are not appealing for various reasons,
Correct.
whether they're too close to other locations or they're just saddled with debt or whatever. But getting that up to full utilization would really further improve your margin profile, even with price compression. So, but I understand that's definitely very tricky. And you mentioned that tourism.
We put up preliminary numbers a few weeks back. We're going to have our audited numbers coming up very soon. I think we had a date in that preliminary news release. But if you look at just what that one store did for us, with the context that we already stated that our other two stores kind of held their own, no problem. But if you just look at what doing this one time for $3.5 million, some of that was free cash, some of that was the 2.9 million convertible, which is already being repaid. If you look at what it did to both our top line, but also the free cash and the bottom line, and then you kind of rinse and repeat that model, you can really see what the potential is for what we have in our grasp.
Mm-hmm.
Have you explored, Sammy, any MSA options? And I bring that up in the context of something we did recently with Glass House, where we have one store called The Leaf in Palm Desert, which for us is, was a good asset, which is rare in California. California retail, Glass House identified it was a great asset, but for us, we wanted to focus on the extraction business and the farm, and we're building out a big retail footprint. So for us, it was great to have somebody like Glass House take over and hopefully drive more profitability in that store, because they already have 10 stores. They have way more buying power. They have a whole retail team. So they have a lot of expertise there. So that's the benefit for us. We also had a supply chain agreement that went with it. But to focus on this conversation, the benefit to Glass House was a lot of the benefit to Glass House was being able to sell more Glass House Farms products in a store. So have you thought about any sort of an MSA route where you could get more shelf space without actually having to dole out the capital to buy the store?
It's just such a unique market in Nevada for that. I don't know if Planet still does. Planet used to charge for their shelf space, and obviously with where margins went in the space, I don't know if that even exists anymore. We're on some shelves. We're on some of the MSO shelves with wholesale with our branded Phantom flower, but it's just not a wholesale market, and not even for the biggest and the best. It's there's no margin in it at all, for one. So you're really diluting down your margin, even if you get some top line sales off of it. It's just not worth chasing. It's a unique market that way. You have to be vertical.
But so when you were talking about, obviously the tourism numbers are way down. I'm assuming that's a lot of international, because everyone sees that what's going on, so they're not wanting to come anymore, at least for now. I'm sure that will change. But
Canadians for sure have shied away.
Right. And that was a big cohort, right? Of that, probably that 180,000 drop is probably a pretty material percentage.
Canadians. Yeah.
We miss you guys.
Interesting stat in that. I was just reading it in the Vegas Sun or whatever, one of the papers, one of the outlets. Convention volume was up dramatically.
Yeah.
So they're trying to offset it, which makes sense, right? I mean, U.S. businesses are going to have their conventions. What better place? So
right. So we have a decent amount of retail in our portfolio, and a lot of work that we do with our companies. We've been talking a lot about the health of the consumer, what's going on with their wallets. And, the idea of the theme of the show is like, we know where we are and like, what are we doing to move through this and capitalize on it. So like, we've been talking a lot about strategy around how do you meet your customer whose wallet is stretched, that's doing less purchasing, and more frequent trips. Like, how are you managing in the stores? Are you seeing that behavior happening in Nevada as well?
We're experiencing it, no question. I mean, I think we published 24% growth from Q1 to Q4, yet that on sales, transaction growth was 38%. And as I stated with the headset data, right, it's not a question of decline in units. It's a question, decline in price, because price is pretty stable, right? The Nevada sales was minus 13%. Nevada units was minus 13%. Price is stable. Where the consumer is feeling it is really, in basket size. They just, they're stretched, right, as you're saying. So I think the average basket has dropped, $10, something like that in the last year. So to your point, right? The consumer may come more often, buy less, and so that's changed certainly what the transaction is, no question about it. But what you tell me, what do you think is how you meet the consumer that way? Other than offering, the most options at the cheapest value.
Yeah, well, I mean, certainly having a robust value offering.
Yeah.
That where then when they do want to add in a little premium something, they can also get that too. But that's definitely a big inventory shift depending on how it was before. I mean, some of these stores were more premium focused and had to, really change how they were doing that to meet their customer and make sure that they're, that customer retention, because if you're not doing it and, competing store not too far away, you don't want to lose them. And so it's just being very mindful about connecting with that consumer and understanding what they're dealing with, and so how you can best position it, but then also, managing the back of the house for, those cash conversion so that it's, just being efficient utilization. So, but inevitably that it is more value, which can be tricky. I mean, like you said, I mean, $20 eighths already for indoor, like, is there such a thing as $10? I mean, I can't imagine unless that's someone that's going out of business and just dumping inventory, right?
Yeah. I mean, and I think that's why our model's kind of stable, healthy, successful, whatever you want to call it, right? Is that we're kind of there, right? Yeah. And, Washington, Oregon, like a lot of these states have already gone through this, right? This is not new in the mature markets.
I also think it's worth defining the term value, because value doesn't mean cheap, in my opinion. Value means, were you happy with what you paid for it? And I've had a bit of this experience in the dispensaries lately where I bought something that was an eighth for $35, and I thought it was, very, frustrating experience. And I bought an eighth for $50 and said, wow, that was a great value. The $50 one was just eighth of, 710 Labs Donny Burger, which is, premium flower. But I was like, damn, that was good. And I'm, savoring that. I bought this other $35 eighth of a big California brand. It's just like, so it was cheaper, but did I really get better value out of it? And that's one of the frustrations I have as a consumer. And I think the unspoken word sometimes about how we battle the traditional market, we battle the hemp market, is let's make better shit, guys. Like, let's really grow great flower, and through growing great flower, you get to do a lot of other things. But I think sometimes we give people a bit of an easy pass on these products because they're cheap or it's tested, therefore you're going to enjoy it. But I find a lot of stuff that's tested and, from stores that I'm supposed to enjoy that I find to be pretty mediocre. So I don't need to go too far on that speech, but I just wanted to kind of think about what that term value means in the modern context. Does value always mean cheaper, or does value mean you paid a price for it and ultimately you were happy with that decision?
Yeah, well, quality exceed price, right?
Mm-hmm. Yeah, well, tying it back to earlier where, it's convenience, it's price, it's what was the third? I guess quality. But in the context of competition, price is a part of that, right? So, sure. Because people are buying just trash hemp, right? I'm sure there's some fantastic hemp out there, but by and large, a lot of Yeah, but by and large, like they don't care. So who knows what's going on out there, and people are more than happy to pay those low prices for it. So I totally understand, but you know,
Which just speaks to
but
how much access matters in the prong equation here, right? Of
yeah,
convenience or access and price, right, and quality. Like
right.
if you just think of what hemp has, gone from zero to, there's all sorts of figures, 20 billion, 25 billion. But, I think we all probably think that most of it is crap,
Yeah.
and or synthetic and or sprayed and all the derivatives of what it is,
Right.
or it's illicit, market stuff that's found its way across into other markets. But access,
Yeah,
that
I think that's a key point because like to Jesse's point, like California, unfortunately, like the $30 to $40 eighths, like it's gotten really lousy, right? Like the degradation in that pricing range is just it's pretty sad. There used to be a robust in depth of like different kind of products or like different strains or different aspects that you could enjoy, and I feel like so much of that has really gone away. Um, so I have a kind of a spicy
growers,
question.
those
What's that?
growers go away. Do you
Do
know
those
if the
growers go
yeah,
away? Probably, yeah.
yeah,
If there's no differentiation, it's all kind of the same mediocre quality.
Yeah, it all feels like it's the same strains grown in the same huge warehouse, which is probably not too
Right.
far from true.
yeah.
They're different warehouses and slightly different strains, but it just feels like people are looking to get quicker turns. They're looking to use cheaper nutrients. They're looking to use LEDs. Some stuff works with LEDs, some stuff doesn't. And so I think it's just people trying to solve the margin problem, which is how many corners can I cut? And that I think, like Morgan was saying, I think the term I always use, Morgan, is just uninspiring. Like, is it clean? Is it strong enough? Does it look pretty? Yeah, but am I going to buy it twice? It's like, there's no way, man. Like, that was just not a memorable experience. And I think that's where I'm kind of stuck in California, is that broadly speaking, if you want the memorable experience, you've got to pay a premium. And I just, I don't love paying $50 or $60 for, ace of flower. So it's kind of a bummer that the middle market, has come down in quality. The exception to that, and I just bought some of this stuff from a company called Soul Spirit, SOL Spirit. That was a mix light organic, organic flower, and that was much better than a lot of the full indoor that I've been smoking. So there's exceptions to these rules, but
Of course,
I think, I think the big indoor market has just got to be pretty uninspiring in California.
Mids, literally, right?
Yeah.
Yeah. So Sammy, I have a spicy question for you.
Shoot.
So about this access issue, if the state, so like California seems like hell-bent on just outright banning of hemp, right? Like they want to solidify that. No plans on enforcement, right?
Did you see well, there was a massive enforcement yesterday, right? 500
DEA raids on illegal grows, right? Yes, and it's a little bit disappointing
that was 260 acres or something like that.
Huge,
massive, like almost twice of what Glasshouse is, right?
Right, and it's disappointing that the state is doing such a bad job of using all their precious tax dollars that companies like Jesse pay to have the federal government come in and do our own work, under their watch. It's very frustrating because they're spending, I saw, like $30 million on research instead of enforcement, and they're bragging about that, and I'm just wanted to, like, it's like good doing research, understood, but I mean, these are precious dollars that we need to still resolve a lot of issues here in the state. But so my spicy question is, why not just start going down the strip? Why not? Because if they're doing it with hemp and you say, what's the difference? Just because you say like this flower, hold the two up, like if a regulator was like, you can't do this, and hold the two up. What, you tell me the difference?
Yeah, test them both. Where? But I mean, you're talking about a state legal operator selling on the strip, selling into how?
Just do it.
They won't give you the real estate to open up your license there.
People are driving in cars, right? Driving right down the strip. I mean, it's just like you see.
I get your point. Like, and there are ways to toe that line. I think we're seeing, the Curaleaf example is probably a good one, right, in Florida, where they're going to have the the co store, right? Like the
Sure.
state legal store and the hemp store cohabitating. But the the Nevada regulators are pretty, I would say, severe. At least they have been historically, with penalties and things like that. If you, I mean, and you could do the smallest of things wrong and you were hit. So I think everybody's a bit gun shy on testing the limits with them, for sure.
Yeah, no, I understand, but I mean, it's like
they pulled licenses, right? I mean, they pulled licenses in that state from operators that were not doing things the right way. So,
Right.
I think,
but it's going to get to a point where it's like, what's even like? I mean, you can comply until you die, or you can force change. And you know, as a good example, like in San Francisco, they're going to start letting Waymo drive down Market Street, which has been unavailable for ride sharing for years. And Uber's like, why the hell won't you let us go down Market Street if you let Waymo? And it's not, how do you weigh one is okay to do and one's not, when it's accomplishing the same exact thing, to the point where Uber's just going to say, like, we're just going to start going down Market Street. What are you going to do? And it's like, if the state, if like every, like a, you know, if the industry, the legal industry in Nevada just is like, this is what we're going to do, and we're going to be prepared to fight it until they treat us equally, you know, otherwise you're just sitting there slowly watching the business get
slowly withering away. Yep. No, these are all great points. I mean, just the hyper speed at which this has happened, even though it was kind of happening over the last, Farm Bill is 2018, but I mean, the really, Dan Conformers put a lot of charts up on Florida, Texas, some of these states, and the increase in tobacco licenses, tenfold, hundredfold increase in tobacco licenses for these smoke shops, these hemp shops. Over the last year, I feel like everything has just gotten insane. So, is it a question of the state legal operators are not keeping up or not realizing this is happening in real time? Is it, you're trying to go through the normal channels and you contact the regulators and you say, what are you doing about this? And you're trying to push for change through the normal channels. For all the Vegas operators that I've spoken to, and Jesse, you and I are both, friends with one, I feel like they're just throwing their hands up in there and saying, we can't win. And it's sad. It's frustrating. It's a little scary for sure. Right. That these states that set up these programs, and really it's counterintuitive, because Nevada's complaining as a state that their tax revenue from state legal program is, has declined dramatically. It's like, well, what are you doing to protect it? Right. I mean,
same issue in California. Yeah.
They were boastful about how they used that $150 million to, support education and the programs that they were using it for. And now they're complaining that there's a $300 million, what they call illicit market. And they're really not differentiating between illicit and hemp. And as we know, I mean, I'm sure there are some hemp operators, like you said, that are good and safe and doing things the right way. But I'm sure there are as many of them that aren't, or bad actors, as we call them, right? So what are they doing about it? And it just, it's so frustrating. I think everybody's in a bit of shock in this industry as to, what happened, how did it happen? It was almost like the decline in the fundamentals was happening, and nobody really recognized why, at least for the beginning of it. And now we finally, have this scapegoat, and and obviously the pushback from the hemp industry, is justifiable from their end. Well, you guys are just trying to protect your state silos, right? So how this is going to play out is ultimately going to be determined by, reform, federal level, the courts. We don't know. And all you can do is kind of operate within the constraints of the market, your markets you're in. And some are willing to kind of toe that line more than others. Some are going to, be more conservative with how they approach, do you chase hemp as an option for your business? I don't see a scenario where it would make sense for us to do that, but I can understand why, some of the larger operators are, at least starting to take a capital light approach to that, whether it's beverages or not. For our market, we're not seeing the impact of the smoke shop or the hemp in our market to the point where we would even consider it. And in fact, we're actually seeing some enforcement in Northern Nevada. They closed down a smoke shop that they raided recently. So it's odd. It's really odd how there is no kind of rhyme or reason to how any of this is being regulated approach dealt with. And I think we're all just trying to navigate it in real time. And I almost feel like it's been this way in this industry for a while. If you think back to, the 2020 curveball with COVID, and in a state like Nevada, they closed our stores down for months. And, everybody had to pivot into curbside and I feel like that's what this industry's been, is the Wild West, right? You're just constantly having to pivot. And those that are pivoting most effectively, are probably the healthiest companies. And those that are, falling short on that front are in trouble.
And Sammy, I've heard you on X expressing some frustration at times with the operating performance of C21 relative to the stock performance. And I understand that, we're a public company as well. And I remember the day we put out a press release about closing on our New York license, our stock traded down for about half of the day.
Yeah.
And sometimes it just seems like, it doesn't seem like, it's apparent these capital markets are broken and there just isn't any real, price discovery.
There's
I'm
not.
curious at C21, A, do you ever think about not being a public company?
I get asked.
And
I get
B,
asked
how do you, so let's stop there. Do you
Yeah.
think about not being a public company? Because for people that don't know, everyone's metrics are a little bit different, but it costs about $1 million a year to be a public company. And when capital markets are functioning properly, and you can utilize those capital markets to, do raises and do different public facing things, then being a public company, as M&A stuff as well can be pretty helpful. But in this environment, Sammy, are you seeing any benefit in being a public company?
I'll be cautious with how I answer this, but no, I'm not. I mean, there is no benefit right now to any of us. But I think we're all holding on to hope that there will be the time that benefit comes back. Obviously we all had that benefit for a period of time 4 or 5 years ago. To your point, we're a company that has 4 quarters straight of growth, 6 years straight of free cash flow, paid off its senior debt, the only public company to do that, only one to have less shares out with our buybacks. We bought back 2 million, over 2 million shares in February. We expanded and our stock's at all-time lows. So where's the rhyme or reason? To your point, there is no price discovery. As an industry, I could make the argument that there's been, the multiple retraction is probably deserved at large. If you think about where the industry was in 2020, 21, what the growth estimates were for the industry at the time, and the stocks peaked at kind of 10 times sales, 75 times EBITDA as a basket. Was that deserved? None of those numbers came close to coming to fruition. And we've seen nothing but fundamental decline since. So, if you look at, to your point, you brought up kind of MSOs at 2-ish, MSOs was at 50-ish. Now the EBITDA multiple is what, 4 versus 75? Like, are we not just talking about complete, multiple contraction because the industry stopped growing? Reform didn't happen. And those were really the 2 big promises of, the hype of 2020, 21 was not only were these companies all supposed to grow double to triple digits over the coming year and year plus, but, we were supposed to see some significant material federal reform, which never came. So, it's not, I wouldn't say it's deserved in all instances. And, there are definitely outliers in performance. Glass House what we've done, I think a lot of people could argue that GTI is a better company now. Certainly, a broader top line, and it's generating more cash flow now than it was then, probably more than ever. But it was down 5% quarter over quarter, and it's flat year over year. So what multiple do you pay for that? And nobody sees the turn, right? Like, what do you point to say, well, this is just a blip? This is, we used to talk about the stair step function of growth with new states coming on, and that has started to lose its merit, right? When Ohio came on, being the largest, most recent state to kind of turn adult use, we really saw no impact at all on improvement in these companies, right? Mm-hmm. The companies that had the tier 1 licenses there and the 5-store max, it really was just backfilling decline in other markets. And you could argue that New Jersey was that, Connecticut, a bunch of these states that came on most recently were really just plugging the hole in the boat. So, I was out there pretty with a contrarian view on Florida, right? Where I was saying, well, Florida to me is just, it's New Jersey, it's Illinois. And yeah, it's going to be dramatic for maybe a few operators to what their results end up being. But for the most part, it's just another state turning on that is going to normalize. We're going to see price compression, and there's so much decline elsewhere that you can't just say, well, these guys are going to double their revenue because they're in Florida. We haven't seen that play out in any of the states that have come online over the last few years, right? If there's a blip, short-term blip, it goes away. And we've had, big companies like Curaleaf have told us that, their big flagship store in New Jersey is down 50% in sales since it came online.
Well, yeah. When you go at 75 million, it's going to come down.
Well, we're talking Nevada a lot today. So let's talk about, the big Nevada operator in Vegas. In Q2 2021, I don't know if I told this story on previous, when you guys have had me on previously, but my mind is blown every time I think about this. In Q2 2021, it was just a single state, single store, superstore in Vegas. Mm-hmm. And they did 33 million top line in Q2 2021 and 7 million EBITDA. Yep. Fast forward to now, they've added Illinois, California, Florida. They've added 33 stores. They, at the time, had 140 million in cash. They now have 15. So they burned 120 million of cash. They've added 135 million shares, in vendor paper in most cases. And they had less sales this most recent quarter, significantly, I think 10% less sales than they did when they were just a single store, and they now have negative EBITDA. Yeah. So when everybody's screaming about, we need someone to blame for this, they, to me, are the poster of, the story is in the fundamentals and in the fundamental decline of this space over the last 4 or 5 years. If you want to know why your stock, isn't at its all-time high anymore, they are the poster to me as to what happened. Now they're a bit of an extreme version, and there are also versions of companies that I would say are healthier now. And I would point at us. We're a healthier company now than we were when we had 30 million of debt. We're a bigger company now. We've grown. And so you would say, well, why are you at your all-time low? Why is it not being reflected? And that's where you can make the argument that there is a bit of a monolith treatment of the industry, right? Where, at least on the Pupco side, where we're all just, the same. We're all put together in a basket, and we all essentially trade on the hopes of reform, and then ultimately we pull back on when it doesn't happen. You could actually make the argument that every single bull case or bull run in this industry, going back to California, Canada in 2018, 2020, 21 with Biden winning and the blue Senate, with Georgia flipping the Senate, every single case has been the promise of reform. Every single one. This industry has never been driven by fundamental progress of the companies in it. So
Right.
I don't know when that changes, but I still think we are still there, right? Where the industry is still completely tethered to that something is going to change for the industry to, make these companies have a more level playing field, a more favorable tax treatment, access to capital, access to the financial system, access to all the things, access to broader exchanges, right? Uplisting. So until any of
Higher
that
exchanges.
happens, higher exchanges, quote unquote. So until any of this happens, and I get why people are frustrated. The remaining people, who's left for one, most of the capital has left the space. In 21, we're talking about 48 billion in equity in just the MSO's underlyings. And we're down to 3 billion in equity from 48.
Right.
The money
So,
left.
where do you think, and this is by no means a stock recommendation world, this is just a thought discussion, and I'll get to it in a minute, but this is the initial. Where do you think your company, what's the fundamental value that it should be trading at versus where it's trading at today? If you were to take away all that noise and say, like, you were just a Coca-Cola company.
Yeah, I mean, to me, it's always about free cash flow and what multiple you want to put on it. And has a company proven that it can sustain that? That first, can they sustain it? Second, can they grow it? Right. And obviously, you're going to get a different multiple applied to you depending on if you can just sustain it and you're a utility. Right. We see how cheap utilities trade. They generate tremendous amounts of free cash, but they get a very low multiple. And, in some ways, I feel like the healthier companies in this industry right now are being treated that way. Whether you want to call it a commodity or utility, however you want to look at it, ultimately applying a kind of 10 times multiple, real multiple, forget adjusted EBITDA, to, the companies when they're all stagnant, they're not really growing, maybe they're sustaining what they have. We all know that GTI is far and above the best fundamental business in the industry, has been for a while, and it's probably trading around 10 times. So
10 times free cash flow as just an example.
If you can't grow, right? If you're just what you are now, if you're showing double digit growth, would you be getting 20 times? Would you be get 25, 30? I mean, would you get a big board multiple at some point?
Right. So the follow-up question to that though is, so if your stock was trading higher, how would that change how you are operating the business with a cautious mindset?
No, our stock doesn't affect how we operate at all. That's the benefit of where we are.
Right. So this is where, to like Jesse's point before about arguably you're never going to get companies or companies, I know you can always get cheaper, but I mean companies that meet your criteria, which I know are seldom, that are that are buyable. But I mean, if we did have if the market got rebid, that's going to affect all these small private companies too.
Absolutely.
So, how do you think about that, where it's like opportunistic now when others, they don't have prospects for exit and there's opportunities to do things while prices are low? I know they can go lower. I'm not saying that they can't, but they're lower substantially than they were 5 years ago, 8 years ago, 3 years ago, even a year ago, right? So it's like, is it a bit of a market timing question, or is it just a limited opportunity? That question,
you're going to time it perfectly. I completely get your point now. When I say we're cautious, I don't mean we're not pursuing. I'm as active, Bruce, our chairman, and I kind of run the M&A and the capital market side of things. We're as active as we've ever been in pursuit. What I mean by cautious is we will not take on, we won't make a deal just to make a deal, just to grow. There is not an example we have seen of any of the pubcos where that has ever worked out.
100%.
You actually have to buy accretive assets. There is no other way. So that's where the
growth accretive. Yeah.
And when you're a pubco like us and you're marked, right, and the market marks your value, it becomes even more challenging because the market's saying we're worth half-time sales, we're worth 3-4 times free cash flow, X280, something like that, right? We trade it.
But isn't that great? Because you can turn around and say the same to them.
So when you go to a private and say, you know, I have to pay you less than that to, you know, to make the deal make sense, and they are still living.
It can still be equivalent. It doesn't have to be less.
Yeah, neutral is fine, but they're still living in a world where, you know, they think that a lot of them, I shouldn't say all of them, but there are a lot of privates that are still thinking that they're going to, you know, get paid at some point, right? They're still holding on to that, especially the operators that, you know, are successful. And yes, you can. I know there's a lot of pursuit of like the 2 and 3 time EBITDAs, but those usually come with hair. So you're going to have to either fix them, or, you know, you're going to take on some debt, or you're going to, you know, take on problems, right? So if you're going to buy an asset that's worth its weight, you're probably going to have to pay for it. And that's really where the challenge comes, for sure.
Yeah. No, I totally get it. And I understand the private side of this industry. It still has not like come to reality of exit values. And just, you know, so I totally understand it. Have you ever looked up what Berkshire Hathaway bought Nebraska Furniture Mart for?
No, but I know, you know, so tell me.
It's basically their inventory working capital. It was like, which worked out to like 0.3 or 0.4 times sales.
Yeah.
It was like a $60 million transaction for a $300 million top line business. Arguably similar margin profiles as our industry. And I just point that out because it's like, you could look at something like that and be like, you know, that's where we are.
That is absolutely where we are. It's absolutely where we are. And the more we stay status quo, the more distress we're going to have, the more publics and privates are going to have to sell assets they don't want to sell. That's just where we are. So that's where you have to be opportunistic, to your point, right? You have to be certainly ready for when that comes. Now, because we have, you know, we're not allergic to going to new states. Like I said, like if there's the opportunity to you know, meet our equal somewhere else, we absolutely do that. I may surprise you. There are not that many Silver State reliefs that are generating, you know, free cash, sustained, and aren't saddled with debt. Like they do exist. There are privates that are like us, but there's not that many. We definitely, we're definitely, that's, you know, Jesse and I were talking about this. I mean, one of the reasons to go to a conference like Benzinga is to just make sure you're tuned into every opportunity that's out there right now. And yes, you can do that, you know, virtually and by Zooms and calls, but it's different when you can look eye to eye with someone and, you know, shake a hand, right? So that's definitely, you know, certainly why I was there. Other than being on a speaking panel, that's, you know, it's what's out there, where is the market right now, you know, who's looking to do something. And, you know, we are on offense. We've said it for a while now, so I'm not telling you something you don't know. But we're going to measure many times before we cut, because a small company like us is, you know, one mistake away from being distressed, right? You can't blow up, you know, look at a large company like Trulieve. When they made them, you know, I can call it a mistake with Harvest, at least what they paid for it. Maybe the asset wasn't a mistake, but what they paid for it and what it did to their cash flow model and how long it took them to kind of, you know, correct the ship. If they were a small company, I don't know if they would have survived that, right? So you can't afford to make mistakes. And we saw with the other tier threes that went out and chased the growth in other states and, you know, leveraged up their balance sheets to expand. You know, it's no surprise a lot of them right now are having trouble figuring how they're going to make it. So it's unfortunate. There's a lot of good people in this industry. I like a lot of the people in this industry. I think a lot of people have, you know, are in it for, look, none of us are in this for, at least now, I don't think anybody's left standing right now is in this because it's glorious to be here, or it's or there's a great economic incentive, right? Like I could be doing something where I'm paid more and have, I don't wake up and get punched in the face every day. So a lot of us, I think, are in it because, we believe in the product, in the plant. I don't know if I've shared with you guys, but I mean, I'm in it because I was in a really bad accident 10, 15 years ago, and I have spinal damage and I'm in constant pain. And that's why I gravitated to cannabis to try to find, effective pain management. And so that's why I gravitated to, and there's a lot of those stories in this space. There are a lot of them as to why people are here. And so I think that's why we persevere in some ways, right? Like I don't need to be getting, my butt kicked every day by the market and just by not being rewarded for any of the hard work. But, I believe in the plant. I believe in the industry. I think there's still a future for the industry, for the state legal industry. I think there are companies that are going to make it. I think, I saw someone make the comment that yes, the companies that'll survive, but nobody's going to thrive. You can't make those blanket statements. Nobody knows what we're facing. Nobody knows how it's all going to shake out. I would say we're thriving right now. Double-digit growth is thriving, right?
Totally.
So it's absolutely incorrect to say that. And whether it's we get Minnesota and we get, who knows what's going to happen with Texas if they actually have a proper medical program in that state and close the hemp proliferation in their state. Like, would that be a market? But if we start to get some of these other markets, Pennsylvania and Minnesota being probably the two, closest to reality, is that a bump for some of these larger operators that are going to be in those places? Can growth come back if we start to see, if there's going to be a federal solution for the hemp loophole, I think it's going to come sooner than later, right? I don't think the Farm Bill is going to get dragged out for the next 5-10 years. I think we're going to have clarity one way or another. And if they decide that, the hemp operators are now going to be married to state legal and be under the same regulations and face the same challenges that we face, at least it levels the playing field. At least it evens the score. It's really hard to compete with someone that doesn't have to play by the same rules, right? So that's, there's hope there. There's hope, obviously. Nobody knows where rescheduling is or where it ultimately is going to land, but obviously it's a game changer. I mean, we all know that. And it's not just a game changer because capital is going to jump in and the stocks are going to go up and maybe people can do raises to solve problems or things like that. I mean, it's game changer if 280E is no longer a $500 million UTP on your balance sheet, right? And growing every quarter. Let's remember that part. The uncertainty of the billions of dollars of UTP right now is absolutely a reason that capital is not jumping in right now. It's not, I've talked to family offices, funds. There's no question about it that nobody wants to jump in until there's some sort of certainty around that. And
it's the most aptly named aspect of a balance sheet in cannabis, probably.
And every time one of you guys makes a good point, I hear a dinging noise go off. Did you guys hear that too?
Yeah.
What is the dinging noise?
What's that?
Guys, $3 billion has to be refied in 26? That's separate from the UTP, right?
Yeah.
Like, why would any real money come in right now with that kind of you have a two-pronged uncertainty here. I'm talking industry-wide. I'm not talking about select companies.
Joking,
I would say there's all sorts of investments right now that are worth taking, that on the risk reward are safe here, right? But broadly, when you look at the 24 publics, 25 publics that are left, and you have $3 billion that has to be solved, and nobody knows where that capital is going to come from other than the creditors are now the equity, which is kind of what we're seeing, right? At least that's what we've seen so far. And what does that, what does that even look like? If you're a shareholder of a company where the creditor becomes the equity, you get crammed down. We have an instance right now, and I'm not trying to pick on people, so I'm not even going to name them, but we have an instance right now where there was a company that had 150 million shares, now has 1 billion shares. And yes, they've 3x their top line, but is that accretive to the existing shareholder? So in a lot of ways, it doesn't surprise me that capital is going to want to wait to see how some of this stuff plays out before, they make their bets. I have all those conversations regularly with people that are, moved to the sidelines. There's a fund where he's pretty vocal on X, and he had a single family office that was invested in the space and had to close his fund, and he stayed in a couple names, including ours, because he feels safe in it, right? But he's not going to put $1 back into this space until some of these questions are answered, and I don't blame him, right? I don't know right now anybody, and all I do is talk to investors and people in the industry. I don't know anybody putting real capital in right now. That's good to see, Morgan.
Yeah, we've invested millions this year.
Excellent.
Yeah.
Yeah, I think people like you are the exception, Morgan. Then I'd say, Sammy, the other ones are people that weren't in cannabis before. Like the most constructive conversations we're having are with people from other industries that are fresh money coming into cannabis, where they're seeing a potential trough opportunity where if you link up with a growth company, toward, we don't know where the bottom is, but hopefully more towards the bottom, and you get accelerating growth, you get accelerating multiples. They're we're talking to some people that have made money in other places, coming in with fresh eyes and fresh dollars. But yeah, the usual crew, they're exhausted.
I like this optimism. This makes me feel good.
I'm not even trying to be optimistic. I'm just
right. Is you spend day after day having the negative, and you have trouble finding the positives in this industry. And part of it is just the echo chamber.
Yeah,
it's just a constant barrage of bear sentiment and negativity and venom. Everybody's looking for somebody to blame for this, and I've been trying to be as balanced a voice on there as possible about let's actually weigh these things with facts and data and what the reality is, so that we can move forward, as opposed to this is somebody's fault or there's some big conspiracy theory as to why we're here. I mean, I just told you why we're here. Yeah. Right?
Yeah.
So
yeah. Well, it's been a good chat, boys. I'd like to keep it going longer, but I'm chasing the clock a little bit. I have a 2:30 coming up here. Morgan, do you want to wrap us with the grok, and then we'll get going?
Cool. Yeah. So I might need to rename Ask Grok to Prompt Grok, because it's not always asking questions anymore. Sometimes you just tell to do something for you. So I said, give me 3 basic ideas for how the cannabis industry progresses today, excluding federal reform. And first bullet point, state level market expansion. States like New York and New Jersey continue to scale recreational markets, driving revenue growth through increased licensing and consumer access. Actually sounds pretty appropriate for a conversation. Ancillary business innovation, tech firms and data analytics platforms enhance operational efficiency, attracting investment into non-plant touching sectors. We're certainly seeing that in our tech portfolio. Consolidation via M&A, multi-state operators acquire smaller distressed cultivators. Not sure I agree with that specific point, but creating economies of scale and stabilizing regional markets. So there's 3 bullet points from Grok. So there you go. You got a playbook to go for.
I'll take the top 2.
Yeah, I mean, I'm sure you guys get asked it. Where's the consolidation, right? We heard consolidation was going to start 2 years ago, and the reality is nobody wants to use their currency because they don't think that it's fairly valued. And to your point earlier, Morgan, I think that's the incorrect way to look at this, because if you wait till your currency gets re-rated, it means that the assets you're going to buy are going to get re-rated too. So, I don't think waiting is going to be, the answer to this. I think it's really about making sure that what you're buying is the right asset. Yep. And it's accretive. And I know accretive is a generic term that I think gets misrepresented a lot in this industry. It's been used in far too many press releases as, I'm buying something for top line that trades at a lower multiple than our top line, therefore it's accretive, and that's just not the case, right? So I think what we still don't have enough of is real sustained operating profit in this industry. And so we're still stuck married to a metric that is really a plague on the industry, right? With adjusted EBITDA. We can't seem to escape it. We can't seem to get away from it, and it's meaningless. And I know you feel the same, Morgan, right? Like if your conversion from EBITDA to cash flow is, sub 50%, what are we talking about?
Right.
So until we have a sign that, there's the majority of the companies in this industry have a sustained operating, cash flow, a sustained operating profit. That's what makes this investable, right?
Yeah, I mean, we talk about this and I know we're really short on time, but it's like anytime you're trying to talk about M&A, if the core is not strong and you're trying to create, sucking in more into a core that is already not, it just becomes a black hole, right? It's got to be a super strong to have that strong gravity.
Tilray. I mean, we have all sorts of examples out of Canada on why that didn't work and why it doesn't work, right? So we didn't have to point to the MSOs for that.
Well, good conversation, boys. Sometimes we circle back to the founding premise of higher exchanges, which is let's have conversations in public that we would want to have anyway. And this definitely falls into that sort of dialogue. I hope that the three of us were going to sit down at Benzinga, but busy schedules and Morgan didn't make it. So I kind of feel like this is the coffee time chat that we could have had at Benzinga, but we decided to have it in public today. So good conversation, boys. Appreciate you coming back on, Sammy.
I appreciate it. Thanks for having me, guys. Look forward to the next time.
Yeah, we'll definitely be that'll be your 4th appearance. Is that right, Sammy?
I want to be the record holder.
All right. Well, we're on the hat trick now. We'll go for the quartet soon. The plan is to be back next week. With higher exchanges, we're going to probably switch to about every 2 weeks. Morgan and I's work schedules are pretty demanding right now. So if things really get cooking, we'll certainly come back to weekly. We're going to try to do about once every 2 weeks, but we're going to do back to back this time because of the 4th of July holiday coming up. We're going to take that week off, and we're scheduled to have Ted Liddy, the founder of Alien Labs, on with us next week. Ted's in Germany right now, but he should be back in time, and really looking forward to that conversation. So thank you all for listening. Sammy, Morgan, always good to talk to you guys, and we'll see you next week.
Appreciate it, guys. Thank you.
The views expressed in this podcast are provided for informational purposes only. Nothing we said should be considered research or a recommendation. All investing involves risk, including the loss of principal.